Welcome to the deep dive. Today, we're jumping right into Bitcoin.
Yep, straight in.
We're looking at a video analysis, specifically the daily price chart. And the big question is, is this latest Bitcoin rally hitting a ceiling, or is there more gas left in the tank?
Exactly. The mission really is to pull out what this analysis says are the critical points right now. Where could things go?
Okay, let's do it. So the video kicks off highlighting a pretty major resistance level for Bitcoin, doesn't it? Around $94,250.
It does. And what's interesting there is it's not just some random price.
Right.
The analysis points out it lines up with a key Fibonacci retracement level.
Ah, Fibonacci. Okay.
Yeah, you know those mathematical ratios traders watch, places
Yeah.
where price sometimes, well, struggles or reverses. So hitting that level suggests it might be a tough spot to push past easily.
Like bumping your head on the ceiling, basically. So from that point, the analysis seems to branch out. Two main possibilities.
That's right. It lays out a bullish case and a bearish one.
Okay, let's take the bullish one first. What's the thinking there?
Well, the bullish idea is that this whole recent climb is actually part of a bigger pattern, like a five-wave upward structure.
Like steps going up.
Kind of, yeah. Five distinct moves up. If we're truly in that pattern, the analysis suggests there could still be, another significant push higher to come.
Okay, the optimistic view. So what about the flip side? The bearish take in the video.
So the bearish argument is that this rally we've seen, it might not be the start of something new and big.
Uh-huh.
Instead, it could just be a temporary bounce, what they call a corrective B wave, within a larger downtrend.
A blip, like a brief upswing before heading down again.
Pretty much, if that's the case, then the expectation would be, well, for Bitcoin to eventually turn back down and maybe make lower lows.
Right, so quite different outcomes. A potential major surge versus just a pause before more downside. Now, for the bulls, the video mentions some specific price levels that need to hold, correct? Support zones.
Exactly. Super important. If that bullish five-wave thing is going to play out, the video highlights a key support area. It's between roughly $84,526 and $88,494.
Okay, quite a range.
Yeah. And the idea is if we get a pullback, maybe that fourth wave, the fourth step down in the staircase analogy, this is where buyers should step in, theoretically, to keep the bullish structure intact.
And if price falls through that zone,
Then, yeah, that definitely weakens the immediate bullish argument. It makes that scenario less likely.
got it. So a critical floor for the bulls.
Yeah.
But wasn't there also talk of like another possibility, sort of a one more push scenario?
Yes, exactly. The video calls it the yellow scenario. It's sort of an alternative path. It suggests maybe we get one last little push higher before a bigger correction sets in.
Okay, so not the full bullish wave, but not immediate downside either.
Right. And for that scenario, there's a tighter, slightly higher support zone to watch. It's between $91,047 and $93,581.
Closer to current prices.
Yeah. The thinking is even if we can't blast through that main $94,250 resistance right away, holding this micro support could allow for one final attempt upward before, a more significant move happens, potentially down.
So really, it sounds like no matter your bias, bullish, bearish, or expecting that final push, these specific price levels are absolutely key right now.
They really are. The video emphasizes understanding the overall market structure. You use how the price reacts at these levels, the $94,250 resistance, those different support zones to gauge the probabilities.
It's not about predicting with certainty, but more about assessing the odds based on how the market behaves at these junctures.
Precisely. It's about understanding the map and the potential routes.
Okay, so quick recap then. We've got that major hurdle around $94,250. We have the bullish case needing support between roughly $84,500 and $88,500 to hold.
And the bearish case seeing the current rally as just a temporary B wave.
Right, and that yellow scenario possibility with its own tighter support zone around $91,000 to $93,500, potentially setting up one last smaller push.
Yep, those are the core scenarios and levels highlighted. How price interacts with them is the key.
It definitely gives you a framework for watching the market. So thinking about all this, the levels, the structures discussed in the video, what do you think could be the catalyst? The thing that finally confirms whether we break higher or roll over. And are there other clues, maybe outside of just price action, worth keeping an eye on in the next few days or weeks? Something to really chew on. Thanks for walking us through that analysis.
Good questions to ponder as things unfold. You're welcome.